Welcome to the AI Fin News channel. The most relevant news and analysis from the world of finance and cryptocurrencies.
Hello, friends, welcome to iFin News channel. Today on our calendar, it's September 25th, a Monday. However, in the United States, at the time of recording this video, it's either evening or deep night. And when America wakes up, and the main forces come into play, the market will gain full power. But for now, as it usually goes on Mondays, everything is quiet. Sometimes, Monday mornings don't align with the evening data on cryptocurrencies, and practically nothing happened over the weekend. I would like to mention the lack of volatility, which is a headache for many who work in this market. The cryptocurrency market is becoming less interesting, and just a couple of days ago, there was about $12 million worth of liquidations across the market, I believe. However, today, this figure reached $68 million. But when you compare it to the billions in liquidations we used to see, you realize how much the market has contracted. Now, before you see a moving Bitcoin chart, like a crab in its side view, from both sides, in stereo. But in the middle, there's a chart that shows that volatility has reached its lowest level in the last several years. Of course, we understand that there won't be eternal low volatility, but the trend of decreasing volatility has been evident for several years. There are occasional spikes that take your breath away, but for now, we don't see much interest or significant volatility. In the past, if you shouted Bitcoin loudly, it used to create a clicking sound like opening certain types of can openers, signifying that Bitcoin was considered dirty. Now, that sound is getting quieter, and even studies are emerging suggesting that Bitcoin could potentially help save or improve the world's environment. In a document published by the Risk Management Institute, it is concluded that Bitcoin has the potential to become a catalyst for a global energy transition. The document states that although Bitcoin was previously seen as a risk due to its energy consumption, it could also catalyze an energy transition and lead to new solutions to global energy problems. The authors of the report also emphasize the important role of energy and the growing need for reliable, clean, and accessible sources of energy. Despite the criticism and high energy consumption associated with Bitcoin, the research has presented a more balanced view of this cryptocurrency, highlighting the potential benefits it can bring to the energy industry. According to the report, Bitcoin mining could reduce global emissions by 8% by 2023. This requires attention from governments to discourage excessive energy consumption and take measures to support clean energy sources. None of us would object to Bitcoin operating on clean energy sources and helping to address environmental issues such as coal dust emissions, waste incineration, and emissions of greenhouse gases. However, at the moment, the Democratic Party in the United States is not taking active steps in this direction. Some countries, especially those with abundant oil reserves, are paying attention to this issue. The price of oil is rising, and some of them see Bitcoin as an opportunity to increase their profits. However, it's worth remembering the unpredictability of the oil market, as even oil futures have reached negative territory in the past. Countries currently involved in oil production have to be cautious and consider various ways of earning, including projects involving Bitcoin. As we know, just a couple of months ago, emerging market assets were in a trend due to easing inflation and lower interest rates. However, now trading has almost come to a standstill, except for those countries that are not dependent on oil. Swift changes are due to the rise in oil prices, which has been around 30% from the year's low, and this has changed the dynamics of emerging markets. Rising oil prices put pressure on prices, undermine hopes for interest rate cuts, and create risks for the budgets of energy importing countries. These changes can impact bullish market rates in emerging markets, which began the year with high expectations but are now facing instability. In developing countries like India, Hungary, and the Philippines, assets are becoming increasingly vulnerable. The United States pledging to maintain high lending rates and rising oil prices, the world may begin to feel pressure on its wallets, especially considering other inflationary factors. This could affect global growth prospects. It's worth noting that rising oil prices are causing concerns worldwide as supplies shrink amid growing demand for oil and oil products. This complicates the task for central banks trying to combat inflation. At present, attention should be paid to oil prices as well as changes in global crude oil inventories. All these factors can have a significant impact on the global economy. There is a concerning trend of decreasing crude oil inventories in the largest American storage facility located in Oklahoma. Over the past 6 weeks, inventory levels have fallen to 22.9 million barrels, which is not significantly different from the 27 million barrels considered necessary for the normal operation of this storage facility, which is a key location for American oil futures deliveries. Such a decrease in inventories is leading to an increase in premiums for earlier deliveries of WTI, West Texas Intermediate, crude oil, given the inventory reductions. If the weekly report from the U.S. Energy Information Administration on Wednesday confirms further inventory declines, a significant increase in this premium is expected. Ideally, with such high oil prices, shale oil production in the U.S. should be increasing. However, the reduction in shale oil production and shale fields is accelerating, and it's expected that production will decrease for the third consecutive month in October. This decline, which began in July after reaching record production levels, is likely to exacerbate the situation further. Is likely to exacerbate the already tense situation with global oil supplies. Prices already seem critical for many countries. Monitoring shale production is also crucial because production cuts in leading oil-producing countries, coupled with the reduction in shale production in the U.S., will certainly impact gasoline prices. This factor, combined with high oil prices and other factors, can intensify inflationary pressure. Low inventories in Cushing, along with reduced production in the U.S., will affect gasoline prices. This could pose a real challenge in the fight against inflation. This decline, which began in July after reaching record production levels, is likely to exacerbate the already tense situation with global oil supplies. Prices already seem critical for many. Interesting to note that last week, Republican presidential candidate Ron DeSantis presented his energy plan, which includes increasing oil production and lowering the cost of gasoline to $2 per gallon in the first year in office. Currently, gasoline prices in the U.S. are approaching $4 per gallon, causing concern among the American public. High energy prices certainly do not favor the Democrats but are supported by Republicans, especially in oil-producing regions like Texas. However, the most crucial aspect in this context is not just pre-election rhetoric but the impact of gasoline prices on inflation. Gasoline prices in the U.S. should be closely monitored. Ultimately, as long as oil prices do not stabilize at a level comfortable for the global economy, global economies, except for oil-producing countries, will remain in a state of uncertainty.
Subscribe if for some reason you're not already subscribed. Please click on the bell so you don't miss out on new videos, because there will be more to come. Bye bye.